Hello, promoted markets. This is Ahura with the global economic outlook in the week ahead, which is going to be the 45th week of 2024. As always, first we will check what happened last week is the geopolitical tensions and also in economic calendar, and then we will see what we can expect from the week ahead. Last week, after a few days of lower tensions on the geopolitical front, tensions again increased in the Middle East, especially between Iran and Israel in Islamic Republic, again treating Israel to attack to have another attack to Israel in response to previous attack by Israel. This is what happened there in these tensions increasing again in the Middle East as well. In Russia also, as we know, there are reports about more than 10,000 or about 10,000 soldiers from North Korea in Russia that they are ready to be sent to the front line, which again increased the tensions between the Russia and Western countries. The European and US again, they treated Russia if they use the North Korean soldiers, they will let the Ukraine to use the Western's weapons to attack to the Russian territory. You know that, as you know, right now they are using the Western's weapons, but they are using for to just like kind of a defense, not to attack to the Russia. So, but the treatment from the Western countries is that if the Russia use the Ukrainian, if the Russia use North Korean soldiers, they will let the Ukraine to go forward. That's what happened there. In general, the tensions again is increased in both Middle East and Ukraine. We know that on the election front, also in the United States, with the election going closer to last days, we had too many things up and down during the election, mostly focusing on the garbage and what's happened. There's each other, both sides calling each other the garbage. And anyway, this kind of, I think the culture kind of is going to be dead in U.S. elections rallies. Anyway, this is what happened there, and we have too many tensions around in both in anything around the world. And also, excitement in the U.S. election. It is on that side. On the economic front, we had earnings reports last week. Most of them, almost 70% of the reports, they could beat the estimates, and we had almost, we can say, the kind of the good week in the earnings reports. This is one. On the economic calendar, also the most data published, especially the PMI and Q3 GDP first estimates and the PMI numbers from the October, they were much better than estimates in most developed and developing countries, especially in Europe and United States. That upbeat data from most of these countries aligned with the little bit higher inflation numbers. We know that the inflation again in the Eurozone increased to 2% from 1.7% in September. This the same thing happened in the US PCE and core PCE numbers. And later, this is in US PCE numbers and core PCE. We know that the core PCE was stable at 2.7% compared to the expectation of falling to 2.6%. While the CPI also increased by 0.2%, much more than 0.1% registered in the previous month. That's while the income also increased by 0.4%, and spending increased by 0.5%. All these numbers, they say that still there are a good demand in the markets, and this demand and consumers that you're ready to spend the money, we're gonna have more challenges to see lower rates, lower inflation rates. In addition, on Friday, we had NFP numbers. We know that the NFP, we had NFP with the surprise of 12K newly created job, but we know that can be affected by the storms and streaks that we had in previous month. We know that the two storms of the Helen, another one, I forget the name, the streaks in Boeing and some other companies also, they affected the market. That's why we had already we had almost just 12K newly created job, but we know that we had more than 90K hirings in just the government section, especially because of the elections. So that's why these numbers getting closer to election need more government employed. On the other hand, the storms and the streaks, they hit the market. So the market somehow they ignored the NFP numbers, but at the same time, we know that the unemployment rate was steady at 4.1%. We know in the last previous 4 weeks also we had a lower initial jobless claims and even the continuing jobless claims. These numbers says that the labor data still isn't strong. Labor market still isn't strong. At the same time, we had average earnings increasing by 0.4% on a monthly basis and 0.4% on a monthly basis and 4% on the annual base year over the year base. So that means generally the labor data and the labor market is fine. Week ahead, mostly focus will be on Tuesday's on Tuesday's United States election, presidential election, and Thursday's Federal Reserve meeting in the United States. The other data, we have a housing data, we have a new factory orders, there's many other data to watch, but still the market will focus on that. So that's why it's going to be so hard to expect what's going to happen. Even though we know that the Federal Reserve going to cut the rates by 25 basis points, but what will happen in the election, that can be much more important. We know that it's not just about the presidential election. We have the House, we have the Senate, and we have the local elections as well, which they're all going to affect the markets, especially the result that we're going to get in the House and Senate. Out of the United States, when we are talking about the geopolitical tensions, we have almost the same uncertain condition in Japan. Japan is also LDP party, which they were leading the country for more than 70 years. They lost the majority in the House, and so now Liberal Democrat Party, which is the LDP called in a short, they're going to face very more challenges to make a government. But we know that on November 11 also we're going to have the election for the prime minister. The prime minister, which is already he's new, but we're going to learn that can he continue his job, or we're going to have the new person, or he will be replaced with the new person. So the geopolitical tensions in Japan is high, which can lead to just like to put the pressures on the Japanese stock markets, and it's not going to be a good news for Japanese yen as well. Out of the US, out of the Asia, in Asia, while we are in Asia, I have to mention that later on the week, on Saturday, at the last day, we're going to have the inflation numbers from China. The inflations in China should tell us what is exactly going on in the Chinese economy. It's not about the Chinese economy facing too many problems. It's not just about the lower demand out of the China. It's about domestic weakness as well. The Chinese, they are not ready to spend their income. So the lower demand in China also leading the inflation, holding the inflation in the lower rates. So with the condition that we have in China, we cannot expect a higher rates, but the inflation numbers on Saturday can tell us much more. Markets expecting to see slightly increase in inflation. Let's see what's going to happen. On Thursday, we're going to have the BOE meeting. We know in the United Kingdom, lately we had a weaker than expected PMIs and economic activities with the new, it's the same condition actually in the United Kingdom as well. We know that the Labour Party, which they had a government, they won the election after almost 14 years. They brought their first autumn financial plan for the government, which kind of failed to meet the expectation. So with too many plans with higher taxes and stuff like that, the businesses, they got disappointed. Now the market's expecting much lower kind of the economic growth for 2025. They're going to miss the expectations in the rest of 2024 and then later in 2025. Generally, economic activity and outlook for the UK is not something we can be proud of. That's why we're expecting the Bank of England to start cutting the rates and continuing the rate fall with 25 basis points at least in this meeting, which is going to slow down the weakness in the stock markets and somehow to put the pressure on the Japanese, on the British pound as well. On Tuesday, also, we have another central bank meeting. Tuesday, RB, Reserve Bank in Australia, they're going to have the meeting. In Australia, despite slightly lower inflation, we have still the worry, and the worry is the concerns on the inflation front. Just while the economy is not doing so bad, the labor market is fine. So that's why most probably the central bank in Australia will hold the rates at 4.35%. That it is currently, but still there are the risk as well to see the lower numbers as well. This is generally what happened in going to happen at Reserve Bank in Australia. But it's, generally the week ahead going to be a very important week, but mostly focus will be on elections in the United States. The election in the United States can affect everything in the market. That's why it's hard to see what we can expect in the market movement. But still, despite all the risks, you're going to check what's on the charts. US dollar index. Most risks are in favor of US dollar. So generally, the US dollar, most probably, as I told, it's very hard this week to expect what's going on in the market. I can tell you, if you do not have the open position, stay hold and stay on. It's just like wait for a good opportunity in the market. Do not open the market. Do not open any position before you get the opportunity. Generally, what we can see here, US dollar index, the most risks are in favor of US dollar index. Then so the US dollar mostly can stay around about 103 mark, 140. But on the gold front, with the after election in the United States, will have a less risk in the market. We know already what's going on in the market. So we can expect a little bit pressure on the gold price. So we cannot expect such a brilliant week for the gold in the week ahead. But still, it's not going to. It doesn't mean the shortfall in the prices. On the oil, depend on what's going on in the Middle East. What's going on in the Middle East? Will Islamic Republic in Iran, they're going to attack Israel, or they're going to respond to Israel's previous attack or not? That's going to make the market. But generally, what we can see, we're a little bit slightly positive about the oil price. This is generally what we are expecting in the market. On the stock markets fund, I forget about that. Stock market is biggest companies, they already published their earnings, so we are not expecting any surprise on the earnings reports. But still, despite what we are expecting on the earnings reports, the tensions on the market, the risk in the market, all of them, they're not in favor of the stock prices. So we're going to continue the slow downtrend that we had in the last previous 2 weeks that we had. This is generally what happened and what we are expecting for the week ahead. If you had any other question, do not hesitate to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.